What happens when a payment doesn't go as planned? Sometimes a payment is rejected. Sometimes it is returned. And sometimes the sender asks to recall it. These terms may sound similar, but in payments, they mean very different things. In this video, we'll understand reject versus return versus recall with simple banking examples and their connection to ISO 20022 messages. Welcome to AK Next Gen Vibes. Not every failed or problematic payment is the same. A payment may be rejected because it cannot be accepted or processed successfully. It may progress through the payment chain and later need to be returned. Or the initiating side may discover a problem and request that the payment be canceled or recovered. The trigger, timing, processing, and messages involved can all be different. So remember, reject is not return, and return is not recall. Before looking at exceptions, let's understand the normal payment journey, the happy path. Imagine a customer wants to send $10,000 to an overseas supplier. The instruction starts with a customer, moves through the debtor bank, may pass through an intermediary or correspondent bank, reaches the creditor bank, and finally the beneficiary. When everything is correct, the payment is initiated, processed, settled, and ultimately credited. Payment exceptions occur when something interrupts this journey or requires action after the payment has already progressed. Now let's see where the three concepts fit. During validation or processing, a problem may prevent the payment instruction from proceeding normally. This can result in a reject. If the payment has progressed and later needs to be sent back, we have a return. And if the sender discovers a problem after sending the payment and asks for cancellation or recovery, we have a recall. For example, invalid payment data may lead to a reject. A closed beneficiary account may lead to a return. And if the sender accidentally enters the wrong amount, they may request a recall. Let's start with reject. A payment reject occurs when the payment instruction cannot be accepted or successfully processed. There can be many reasons. Mandatory payment information may be missing or invalid. Account information may be incorrect. The instruction may fail format or validation rules. There could also be compliance, processing, duplicate, or unsupported instruction issues. Here's the easiest way to remember it. Reject means I cannot process this payment instruction. One important point, don't assume that reject always means simply before settlement. The precise lifecycle point and status semantics can depend on the payment scheme and implementation. Let's take a simple example. A customer instructs Bank A to send $5,000 to a beneficiary. Bank A creates or processes the payment instruction. But during validation, mandatory information is found to be invalid. The instruction is therefore rejected and does not continue normally through the payment flow. So here the key idea is, the payment instruction encounters a problem that prevents normal processing. Now let's connect this with ISO 20022. One important message used for communicating payment processing status is PAX.002, FI to FI Payment Status Report. In applicable flows, PAX.002 can communicate rejection information. For example, Bank A sends a payment instruction to Bank B. Bank B may communicate a rejected status back using PAX.002 with a status such as RJCT rejected. But remember this distinction. PAX.002 tells us about status. It does not itself return the funds. We'll come back to this difference in a moment. Next is return. A return occurs when the original payment has progressed far enough that a return process is required to send the payment back. For example, the beneficiary account may be closed. The account may not be able to receive the payment. There may be regulatory or compliance reasons. Or there may be incorrect beneficiary information or another reason requiring the funds to be sent back. The easiest way to remember return is, the payment went forward, now it must come back. Let's use another banking example. Bank A sends $5,000 to Bank B. Bank B receives the payment. But Bank B discovers that the beneficiary account is closed. The payment, therefore, cannot be credited as intended. A return process is initiated, and the funds are sent back through the applicable payment process. This is fundamentally different from simply reporting a rejected status. Here, we are talking about sending the payment back. And this brings us to PAX.004. PAX.004 is the ISO 20022 payment return message. Conceptually, the original payment moves from Bank A toward Bank B. When a return is required, PAX.004 is used in the applicable return flow back toward the original sending side. This gives us a very important distinction. PAX.002 equals status. PAX.004 equals return. We've already covered PAX.004 in detail in a separate AK Next Gen Vibes video, so check out PAX.004 explained if you want a deeper understanding of that message. Now let's come to recall. A recall is different from both reject and return. Here, the initiating side seeks to cancel or recover a payment that has already been sent into processing. Why might this happen? Maybe the payment was duplicated. Maybe the wrong amount was entered. Maybe it was sent to the wrong beneficiary. There may be a fraud concern. Or the customer may request cancellation. The easiest way to remember recall is, I sent it, now I want it back. But here's the critical point. A recall request does not automatically guarantee recovery of the money. It is a request. Imagine the customer intended to send $1,000. But by mistake, the customer instructed Bank A to send $10,000. The payment has already been sent toward Bank B. The customer discovers the error and contacts Bank A. Bank A can then initiate the applicable cancellation or recovery process. But what happens next depends on factors such as the payment's current status and the rules governing that payment flow. The receiving side may need to investigate and respond. So requesting a recall and successfully recovering the money are not the same thing. Now, where does CAMP.056 fit? CAMP.056 is the FI to FI payment cancellation request message. It is an important ISO 20022 message used in relevant payment cancellation flows. Conceptually, Bank A has already sent the payment toward Bank B. Bank A then sends a CAMP.056 cancellation request toward Bank B. And the most important word here is request. CAMP.056 does not mean the payment has definitely been returned. The outcome depends on the applicable payment flow, status, and rules. Understanding this distinction prevents a lot of confusion around recalls. Now let's put all three together. Reject *, the instruction cannot be accepted or processed normally. Think, stop. Return *, the payment needs to be sent back. Think, send back. Recall *, the sender asks for cancellation or recovery. Think, ask back. For our ISO 20022 examples, PAX.002 can communicate payment status, including rejection information. PAX.004 is used for payment return. And CAMP.056 is a payment cancellation request. If you remember only 3 words from this video, remember, stop, send back, ask back, ***. Here's the complete picture. Start with a payment. If we are dealing with a reject, think about status reporting and inapplicable ISO 20022 flows, PAX.002. If we're dealing with a return, think PAX.004 and the payment moving back. If we're dealing with a recall, think CAMP.056 and a request for cancellation. So never confuse status, return, and cancellation request. They represent different concepts and different actions in the payment lifecycle. Before we finish, test yourself. What is the difference between reject and return? What is the difference between return and recall? Which ISO 20022 message is used for payment return? What is PAX.002 used for? What is CAMP.056? And finally, does a recall guarantee that the funds will be recovered? If you can confidently explain these answers rather than just memorize the message names, you're building a strong understanding of payment processing. These concepts are particularly useful for payments BAs, developers, testers, product professionals, and Swift or ISO 20022 interviews. Let's summarize. Reject *, the payment instruction cannot continue normally. Think PAX.002 for status reporting in applicable flows. Return *, the payment needs to be sent back. Think PAX.004, payment return. Recall *, the sender asks for cancellation or recovery. Think CAMP.056, payment cancellation request. And here's your final memory trick. Reject equals stop. Return equals back. Recall equals ask back. Now that we understand reject, return, and recall, the next logical step is to understand the cancellation process in more detail. So, in the next video, we'll cover Camp.056 explained, payment cancellation request. After that, we'll continue with PAX.028, then PAX.008 versus PAX.009, and finally connect everything through a complete ISO 20022 payment flow. If you're learning Swift, payments, ISO 20022, or banking technology, subscribe to AK Next Gen Vibes and continue the series. Understand the flow. Master the messages, ****. Thanks for watching.